If there's a certain amount of goods and services and capital in the economy, and you just keep printing money, you're not creating any more capital in the economy. You're not creating any more products. You're not creating any more buildings. You're not creating any more services. All you're doing is doubling and tripling the amount of currency. So if I just gave everybody in the United States $1 billion and everybody went out to buy a Ferrari, right? Would there be 250 million Ferraris? Like, I can print the money, right? Like, look at Venezuela, look at Zimbabwe. They can print the money. You can give someone $1 trillion note, but that doesn't create more stuff, right? You're just creating paper. So ultimately, that inflation, it works only to an extent if you can export it. And what you're doing is, you're not creating anything. What you're doing is you're redistributing wealth. Like, if there's $10 billion in the economy, and there's this much stuff, and I give $1 billion to you, you now get 10% of the stuff from somebody else, which means that everybody else lost 10% of their stuff. As I inflate the economy, or inflate the currency, I'm actually redistributing wealth from those that store their life savings in currency or currency derivatives, in cash. If you had $1 million in the bank 12 months ago, today it buys you 34% less. The S&P is up 34%. You have $1 million. If you put it in the stock market, you've got $1.34 million. If you hold it in cash, you've got $1 million. If you go to buy a stock now, it costs you 34% more to buy the stock. If you go to buy a house in the Hamptons, 40% more to buy the house in the Hamptons. You know, if other things are going up in price, your cash is fixed. So it turns out that you've got some people that don't have net cash positions. If you're a sophisticated investor and you're wealthy, all of your assets are in property. You have buildings, you have companies, you have real estate, you have collectibles, you have sports franchises.
Right, you have things.
If you're middle class, working class, you're working for cash, and whatever cash you've got, right, is either sitting in the bank or you don't have a lot of net cash. So the real significance here is, if the dollar loses 20% of its purchasing power each year, the value of your salary is deteriorating by 20% a year. It's not falling at the rate of CPI inflation. It's falling at the rate of monetary inflation. The road to serfdom is working exponentially harder for currency growing exponentially weaker. That's the problem. You're a dentist, you're generating 5% more a year for a decade. I'm inflating the money supply at 20% a year for a decade. If you save every penny, in 10 years, you'll be able to buy 1/4 of what you could have bought today, because the price of housing is going up at 20% a year, and you're just not ever going to catch up, right? Because you're getting paid in currency. The only way you can actually stay ahead is to grow your cash flows faster than the rate of monetary inflation. And that's why the rate of expansion of the money supply is so critical. And that there's not even a word for that other than cost of capital. The best surrogate for monetary inflation, in my opinion, is the S&P index, a distributed market basket of scarce desirable products. Money is energy. The problem is inflation. If we're inflating at 10% a year, you know, you've got 10 pints of blood in your body. When you go to give blood, I take a pint out. When I take a pint of blood out of your body, you lose the red blood platelets. Anybody common sense knows, you run the Boston Marathon the next day, you got a problem. You can't perform as an athlete. It takes about 4 to 6 weeks to replace the red blood cells. So when I take a pint of blood, you're not going to be able to perform for a month to two, probably 2 months later. Imagine if I actually took a pint of your blood every month, forever. That's inflation. So I'm running an economy, I'm the king. You have a dojo, and I send someone from the government, and we just take a pint of blood from every one of your fighters, and then next month we do it again. And next month we do it again. And next month we do it again. What do you expect your athletic performance to be?
In decline.
Yeah, that's the problem of a currency which is collapsing. But let me tell you, that's 10%. Venezuela's not 10%. Zimbabwe's not 10%. The Argentine peso was 1 peso to the dollar 20 years ago, and it's pushing toward 200 pesos to the dollar today. They've lost 95, 98, 99%. In a hyperinflating economy or a rapidly inflating economy, you're not losing 10% of your economic value a year. You're losing 20 to 25 to 30 to 40. So that's like I send some dude to the dojo to bleed you every week. And then at some point, I'm sending someone to bleed you every day, and that's the Weimar Republic, right? Hyperinflation. When, another metaphor, the currency is to the economy what your blood is to your body, and economic energy or money is to the currency what oxygen is to your blood. Common sense says if I keep sucking the oxygen out of the room, if I suck the oxygen out of the room, you're going to either suffocate or freeze to death. And if I keep sucking the economic energy out of the currency, the economy collapses. In the extreme, you get ripped back to Stone Age barter. Right? When the money doesn't work anymore, I have to trade you cigarettes for bullets. And the problem with that is the economy becomes a million times less efficient, right? If you don't have money. Now, how many countries in the world have a collapsed currency? 66 are dollarized. There's 180 about countries. There's 130 floating currencies. All of them are weaker than the dollar. The US dollar is the world's reserve currency. The US dollar is expanding. It was expanding 10% a year for a decade, now expanding at 14% a year. It expanded 34% over the past 12 months. The dollar is weakening, okay? It's like the oxygen is getting sucked out of the room. So Tucker, if I told you the oxygen is getting sucked out of the room and there's an oxygen mask drops out of the ceiling over there, what would you do?
Run for it.
Yeah, put the oxygen mask on. Bitcoin is the oxygen mask. The point of Bitcoin is to fix the money. And money is energy, and energy is life. And if I keep sucking the energy out of the economy, I'm sucking the oxygen out of your system. Either, under the best case, you perform poorly. Under the worst case, I suffocate you to death or freeze you to death. That's the problem. That's why empires collapse. That's why economies collapse. And the problem is, it's not just a problem for an individual. It's not just a problem for a family. It's a problem for every institution. It's a problem for every company. It's a problem for every city, every municipality, every government, every civilization. They all have this problem. And you can generally trace the problem to, I fought a war I couldn't afford to fight, and I paid for it with money I didn't have. You declare war on COVID, you've got a war. You declare war in Vietnam, you declare war on fill in the blank. History is full of wars. If I had to fight them with taxes, then eventually my population would say no more, we don't want to pay the tax. If I fight them by inflating the coinage, then I get a couple years, 2, 3, 4 years before people realize it. Eventually I just collapse the currency. Money is essential to civilization. The problem is inflation. And why does it happen? It's a natural human condition because as you have an authority that controls the money, the temptation to inflate the money supply is omnipresent and inescapable, and every civilization has suffered from it at one point in time.